Welcome to the Stage Analysis Members Weekend video. So we've got a lot to run through tonight. We've got a little bit start tonight's video with a little bit of an in focus on what's been going on in the biotech group. It's come into focus in the last 3 or 4 weeks or so, as it's had a strong rebound off of the lows in stage 4, and a lot of people have been getting excited on FinTwit about it. So I did cover a bit about this on the Wednesday video, so I wanted to go into a little bit more today and have a look at a few potential stocks from the group that are in early stage 2. There's only a couple really. There's a few that have had sharp moves up and potentially are in stage 2 as well, but a few of the better quality ones I wanted to cover before getting on to some of the more regular content, the major indexes, the industry group relative strength tables. We'll have a look at I did the industry group bell curve for the 104 industry groups this week for the first time in a couple of months. So different to the bell curve that I do with the IBD stocks. Same sort of principle. It's the same principle, but it's using a different set of stocks, and it's not using the bullish percent. It's using the percentage of stocks above their 30-week moving averages. So it gives a slightly different look, but basically there's a similar result overall, but you can see which individual groups are where and where the focus is on the bell curve. So that, then the market breadth to determine the weight of evidence, and finishing off with the watchlist stocks and some potential stage 2 breakouts that we saw this week. So I'll cover those before I get into the watchlist stocks actually, but because there was a couple, one which obviously I highlighted earlier in the week on the midweek video, which was CELH. So that did actually manage to complete its stage 2 breakout on Friday. So I'll be covering that a little bit again to see how it finished the week, as well as a couple of others. So we'll get into that in a bit, and some of the group themes from the watch list. So let's get back to this then. So starting off, I'm going to look at the XBI here. So I've created a bigger chart for this time. As my normal chart normally covers 2 years and 3 quarters. So I've taken this back around, I think, 5 years or so. So you can have a look at give it a little bit more context over time, and show the full stage analysis over multiple time periods. There's a lot of people getting excited by the recent bounce. So you can see the change of behavior that we've had recently with this move up. So the previous rallies were shorter, but they've been expanding over time. So we've seen a little bit of a change of behavior going on with this recent rally. It's the strongest one by far we've had in the stage 4 decline. But as you can see, this stage 4 decline, since actually started to break down into stage 4 more convincingly, had around a 50% decline, whereas previous stage 4 declines back in 2018-19, the stage 4 that we had back then only dropped around 30% from the breakdown level to the low. So it's been a lot more severe this time, and we've come all the way down to the bottom of the range again. So this has basically gone sideways for the last 4 years now because of that. So, but you can see previously we had a different kind of stage 3 top. It was a lot more of a softer top where it rolled over more gradually, a bit more of a classic Wyckoffean structure here. So you can see we had an initial short-term buying climax into an automatic reaction, secondary test, and then some forward testing, a little bit of up thrust after distribution, and some testing before all rolling over. So at this point in here, within the actual broader base structure, it's starting to roll down, and potentially with the turn down of the moving average there, that was your early move into stage 4, but then got more convincingly into stage 4 as it started to break down in this area and attempted to spring, but then rolled over immediately and completely rolled over and couldn't get back through that declining 10-week moving average there before making obviously a sharper move to the downside. You can see it was quite brief, finished a similar time to the rest of the market, as the market bottomed out in December time in 2018 from its stage 4 decline, and then started to rally back up. You can see biotech didn't move off into stage 2 like a lot of areas did. It actually went sideways and formed a stage 1 base structure with a little bit of a raggedy structure, quite weak, had a undercut there before making a failed stage 2 breakout attempt at the end of 2019. You can see how weak the breakout attempt was here. If you look at the volume further down there, you can see it was actually declining volume as it was breaking out. So there wasn't much conviction. There was the price spreads on the weekly bars were very tight. So, and it was running into an area of resistance and didn't actually manage to even make a higher high there. So failed as an early stage 2 breakout attempt, and then broke down convincingly into stage 4 once more with the COVID breakdown in February, March time there. So broke down in March before shaking out and coming back up and finally moving back into stage 2 before having that really strong move through 2020 into the 2021 top, where we got that parabolic move into the high and buying climax, and then started to form this lower base structure, which, as you can see, was exceptionally weak. As obviously from the initial buying climax automatic reaction, the vast majority of the price action formed in the lower half of this structure. You can see this, if we break this structure into two, then it wasn't even in the, it was even in the lower third of the structure that the majority of the price action formed, and undercutting it significantly. So it's broke down into stage 4 back in November time this year. You could potentially argue it had already broken down into stage 4 earlier in this point in here, as it started to moving average turn down strongly, but it was still within the base structure. So this is really what we would class as the stage 4 breakdown area here. So around this kind of area, these few weeks here, as it started to move more convincingly, and this is your back towards the support area there. So that's your secondary entry point. So in the stage analysis method, this would be an initial breakdown point to a potential attempt to short, and then on the back up move into here as it starts to roll back over again. So this week here would have been another area to potentially attempt as a lower risk entry point, with obviously resistance above there. So this has had a strong stage 4 decline, as I said, over 50% since the actual stage 4 breakdown there. If we go from the actual high, it's had an exceptionally big move down, so 65% almost there. And this is a ETF of the group. So as we know, this is a group ETF, then individual stocks will have had extreme moves compared to that, and 65% is an extreme move on its own. So that's a lot of damage that this group has sustained. And so it's not surprising to see such a sharp rally off of the lows, as obviously there's a lot of pent up energy in there with a short covering rally underway. But as we know, we don't always get a V bottom. It's actually a little bit more rare in individual stocks. You can tend to get an initial reaction bounce, and then we start to get some testing and the base structure starts to form. You can still get these V-type bottoms here. So as we can see, it happened in biotech. So we had the sharp move down, sharp rally up, and then it started to form a base structure. So we can have this kind of stage 1 behavior where the majority of the price action forms in the upper half of the structure here. So you can see this is your kind of range from your selling climax into your automatic rally, but then the vast majority of the price has formed up here, and we saw the same at the top of the range here, as I just talked about, with the opposite happening. So whether that will happen again, who knows? But at the moment, if that kind of price behavior did happen, then we would be expecting some kind of base structure to form in this kind of area here, with bouncing around the 30-week moving average and starting to form a sideways base. Or potentially, if supply is strong, so obviously we are moving into an area of resistance here. If supply comes in strongly, then we could see a secondary test that comes back down into the lower part of the range here, as we could start to form a broader base structure that bounces around in this kind of area for a while. So no guarantees of that. We could obviously have a V bottom and it could immediately rush up into stage 2 again, but the kind of overhead resistance that stocks in this group are going to have because of this deep decline, as I talked about in Wednesday's video, is going to make it exceptionally hard for that kind of behavior to happen. It would need a hell of a lot of money going into the group to actually propel it through that resistance, as there's so many trapped buyers in this area here on the way down. So many people want to get out even, so that overhead resistance is going to keep this contained more than likely over the medium to long term even. So it could be, for example, the 2019 bounce, which was a smaller stage 4 decline, took a year and a half in order to move back into stage 2. So those expecting it to move into stage 2 immediately on the first bounce, you might be disappointed, as often stage 1 can take quite a long time, especially as there's been a big stage 4 decline. However, a one way that we can have a look is to actually look down into the individual stocks themselves in the group to determine if we are going to see strength or whether there's more weakness to come. So I just wanted to highlight 3 of the strongest stocks in the group. There's very few actually moving into stage 2. There's a few, like I said, that have had big short covering rallies and potentially moving back up to stage 1, and potentially some could have immediately thrust through into stage 2, but have got huge overhead resistance to deal with. So Halo is one of those stocks that's actually very, very different to the group in terms of it's held up tremendously well by comparison. On the pullback here, you can see it's making relative new highs on the relative strength here. This is the Mansfield relative strength which has a 52-week RSMA on it. So you can see that's starting to turn up and it's making a new high versus the S&P 500. So it's moved into stage 2 for potentially, I think this week here would be the potentially move into stage 2. It did make obviously an earlier attempt in here which failed immediately, but at this point in here I wouldn't class that as stage 2, as the moving average is only just flattening out and we're still only just forming the fledgling part of a base structure at that point. So once it started to go sideways for a bit, it managed to hold that 30-week moving average. So we got a very small stage 1 kind of area, but it does actually, the initial stage 4 does become part of it. So this is a good example of a base structure isn't necessarily just one level. Sometimes it can have multiple levels. It can be messy. So this is a good example of a really messy stage 1 base after a failed stage 4 here. Really, it managed to was in stage 4 for multiple months, but looks like it's failed and moves back into stage 2. This could, at the end of the day, end up being a much bigger pattern and end up forming a double top. It could easily move up into this area here and then fail and then form a lower high test and start to come back down again and then move off, and we could eventually have a huge stage 4 decline. That's obviously a pattern that happens very often, so definitely don't count that out. It's obviously moving up into near-term resistance here, so in the near term it's hit a level at the moment, so it's in a potential double top area as we speak from the secondary test in here within the initial start of the stage 3 that hasn't managed to get up towards the highs yet. So if it can, it's moving into an area of resistance here that could potentially turn it back around again in the short term. But as I said, it remains in stage 2 for the last 7 weeks, and it had a big engulfing candle this week with a 16% move. So it does look interesting. And on the daily time frame, you can see it's moved up to the +3 ATR level. So we're on the daily charts. Sometimes I highlight the 3 ATR levels here. So the 21 day is the moving average in the middle, exponential, and then it has 1, 2, and 3 ATR counter bands on it. So when you get up to the 3 ATR level, it's often a little bit short-term extended. You can see in this kind of area here, it got up there with a little bit less strength into it and then went sideways for a while before then rolling over. So and at this point here it got up to the 3 ATR level. So it's often an area similar to Bollinger Bands of short-term extension. So it might need to go sideways or pull back at this point here as the breakout. It's obviously has been strong over the last week. We've had a big move in a week here. So from this, it managed to rally around 20% in the week. As we said, closed up about 16% overall. And there was some strong volume in there, but I see the volume on that second day, it wasn't much weaker than we saw on this bigger price. So you can see there was a big price spread, but then we had a much smaller price spread on the secondary bar here, and the volume was still quite heavy. So a lot more supply coming in on that as well, potentially. So potential sign that we could, in the short term, have a reversal. So whether it goes sideways, forms a little VCP pattern and continues up, or whether it needs to form a deeper structure, then that's potentially would be there's some bullish scenarios that we could be looking at. As I said, on the weekly chart there, on the more bearish scenario would be that it forms a double top and rolls over and starts to come back in again. But at the moment, obviously in early stage 2, so potentially one of the strongest in the group in how it looks and in terms of quality with the relative strength and the price and volume behavior. Another one of interest from the biotech group is UTHR. Again, a little bit short-term extended. It had a huge stage 2 continuation breakout attempt. What we got there? 1, 2, 3, 4, 5, 6. about 7 weeks ago again. So another one that broke out there. It was a huge weekly candle, which moved over 25%, which, as you can see, is out of character for the stock. It hasn't managed a bar like that I can see within the last 4 or 5 years there at all, except for potentially on the downside. So huge move back into stage 2, which broke this out of this stage 3 range. So you can see it was making a stage 3 structure here. So we had a buying climax, an automatic reaction, moved into a secondary test as an upthrust, as it upthrusted a little bit there, and tested again another upthrust within phase B, and then it formed yet another upthrust and a test, then a lower high. So we've got a UTHR, which is an upthrust after distribution and test, and then it broke down the significant weekly bar, but managed to hold at the lower of the range and form a spring type structure here. So managed to come back in, started to rally back up again, and we've now moved out with this sign of strength back into stage 2. So it was forming stage 3, but then with the spring and the move back up into here, that then reverts that stage 3 back into potential stage 1 and then into stage 2. So a lot of people say you can't go from stage 3 into stage 2, but if you just study the charts, you'll find it happens quite a lot. Time is also a way that you can have a decline. Stocks can be distributed over time as well as in a decline. It doesn't have to make a stage 4 breakdown necessarily in order to obviously get rid of those weak hands and get rid of the supply. So once that supply is exhausted and demand comes back in, so often the stage 4 breakdown, which is what the spring here is, often this area here is what we call a test of demand. So as a stock attempts to break down into stage 4, it's a big test of demand. If the demand still exists, then a spring forms and it starts to move back up into the range, and this forms what we call a phase C entry point in the Wyckoff method, and then you get some further secondary entry points through this kind of area in here within the phase C and phase D of the base structure before breaking back out again. So at the moment we're in what we call the potential backup structure here. So potentially this could, if it is in stage 2 now, which it has been for about 7 weeks, if it can hold up within this area here and not drop back into the base, it might dip into the base a little bit, then potentially that stage 2 could continue on to higher highs. But in the short term, with this rising wedge here, which is a little bit of a bearish pattern, so it could need to break back down towards the moving averages and start to form a higher structure. A VCP would be the best in that regard, but if it does need to move down further, potentially even a spring back into the structure itself, you can sometimes get a fractal structure within the structure, so you might get a spring type action within here before moving back up and out again. That's another potential scenario that could form, or this could itself form a much bigger upthrust after distribution. If it does fail and come back into the range like this and start to fall over, the moving average starts to turn back down again, then it becomes obviously a short again. So at the moment, though, looking at it on the long side, you can see relative strength versus the S&P 500 has been exceptionally strong over the last 3 months or so. Had a strong volume on the breakout move here, so price and volume in line as well as a relative strength. So at the moment, this one is a good example of a stage 2, but it probably needs a little bit more time for a higher base structure to develop, as it's a little bit extended in the short term. Which, if we go onto the daily chart here, you can see that rising wedge pattern. If I add the 3 ATR levels to this, you can see in the short term, it's just under the 2 ATR level, so it has got room. It could break to the upside if there was some strength in it, but obviously this volume in here would be why I'd be a little bit more concerned of that, as this is not a VCP pattern, although it looks like one. As when you get a VCP pattern, you're looking for obviously the price to come up and start to tighten up within that structure, within a more of a flat horizontal type environment there, not a rising pattern like we've got here. As this, it's a bit more of what we call a shortening of the thrust. So each breakout attempt here has got shorter. So you can see this move here and then this move here, it's shortening, but the volume is still high. So that means that supply is potentially coming in at the highs here and stopping it from rising. So that could still be overcome and it could still make a breakout to higher highs. But with that kind of price action, I'd be looking for it to pull back a little bit myself. IMCR is another one from the group that is of interest. It had a stage 2 breakout attempt this week. Could potentially argue that it broke out into stage 2 a little bit early within the base structure, as the 30-week moving average had already turned up, but it was breaking out into an area of resistance. So this week was a more convincing attempt, broke multiple levels through the IPO week close here as well, managing to close back above that with relative strength. Obviously exceptionally strong here. So this has been forming what we call a primary base since the IPO. Did fall down into stage 4 and then reverted back up again into potential stage 1 here, and now breaking out into stage 2. So again, if I drop down onto the daily time frame here, you can see it's at the free ATR level once more. So again, in the short term, a little bit extended here. It's had a strong move over the last week or so, about 2 weeks or so, 70%. So it could still keep running for a little bit up that free ATR level. Sometimes happens. You can see you can get runs along the I keep saying the same word. Sorry. You can get runs down the level or up the level when it's getting a little bit more parabolic. So it could potentially carry on there, but in the short term, once we reach that level, it tends to be extended in that short-term time frame, and so might need some time to go sideways. So again, we're looking for it to hold some levels. So this 40 level here, I'd want to see it respect that, as that's the IPO week close level. So if it can hold in this kind of area then and start to form a structure within there, then that could potentially be of interest if it can tighten up on contracting volume. As you can see, it's been volume again was expanding, was still quite strong, similar to the previous day, but it was actually a much shorter bar. So this bar here was quite long, and then the following day was shorter, but you can see the volume was actually very close to the previous day. So definitely an increase in supply coming in there, as it was failing to make much further progress. So that is AMCR. Right, let's move on to the next